Right,
100% right.
So just to say that, you know, the SME sector is the engine of growth in sub-Saharan Africa. There's various statistics that prove that, and here as well in Kenya, it's a huge machine for growth. So if it's optimized, it's going to deliver more growth and it's going to create more jobs. I just wanted to make the point for big banks, you know, for a long time it was the cost, the channel cost. The cost to evaluate 1,000 SMEs and make loans to them of 50,000 shillings is just not worth it, right? Because you've got to deploy a number of people. The cost of that deployment was expensive. So banks kind of said to themselves, this is really not worth it. Now what's happened in the meantime is we've had a revolution in the mobile phone.
Exactly.
We've had a collapse in the channel cost to get to the customer. We can potentially, there's a proliferation of fintechs who are dissecting and diagnosing your creditworthiness based on your phone call history. And we've got a revolution happening there, which ties back to the point that James was making at the beginning, which was about this moment of massive change in the banking sector, of which I have no doubt. And when I look at it and I think to myself, you know, what is going to be the most successful bank in 5 years' time? If I was just entering, I just want to be a digital bank, no branches, you know, operating on high-end artificial intelligence. And that makes me very worried right now for a number of banks who are not necessarily seeing that future.
Very rigid banks.
And understanding. I don't know. And the thing is, you know, it's very difficult when you're in a legacy environment to shed the legacy quickly enough, right? I mean, so you keep thinking, oh, so you continue to cut back each year, but you're not kind of embracing the future, and suddenly it's there. It's some guy out of, you know, some smart IT guy who's now built a business which is serving 2,000 SMEs, for example.
I mean, quite honestly, you must ask yourself,